Thank you, and let me thank the CFA Society for inviting me to the Nigerian Investment Conference here at the Eco Convention Center. Good afternoon, ladies and gentlemen. I am truly pleased and indeed delighted to be here this afternoon. I'm particularly honored for the opportunity to speak to a gathering of intellectually renowned financial experts and captains of industry. I'd like to especially thank the President of the CFA Society of Nigeria, Mr. Banji Fehitola, the Secretary, Mr. Chuka Maduabum, and the Society's executive, not only for organizing this wonderful event, but also for inviting me to address this eminent assembly. I commend you for the initiatives to, through this conference, improve the ethical standards, transparency, and credibility of Nigeria's investment industry, and I will also speak to that. This will certainly aid the development of an efficient financial system and immensely help to boost systemic liquidity and deepen our financial markets. At the CBN, we appreciate the ensuing professionalism which you aim to pursue and are willing to collaborate with you to foster confidence and ensure stability of the Nigerian financial system. I'm particularly interested in your theme, Let's Measure Up, which I am made to understand is also the CFA Institute's global campaign that aims at increasing the awareness that the investment industry is built on honesty and transparency. I said earlier that I really appreciate and thank the CFA Society of Nigeria for inviting me and also for organizing this investment conference. While I was waiting up there, some discussions came up between myself and some of the executives of the CFA about Nigeria and about the opportunities in Nigeria. And we got to a point where we started talking about that there is a need for all of us, and we see this as an opportunity through yourselves that I'll use the word, are very strong and articulate members of the investment community in Nigeria, to begin to think about how do we change the narrative about the opportunities in Nigeria. We need to begin to think about, and I'm quoting this because it's not my word. He said, there is a need for us to begin, and you as investment analysts need to change the narrative for the good of Nigeria by talking about the opportunities there are in Nigeria rather than that the opportunities there are in investing in Nigeria rather than the challenges of investing in Nigeria. I hope I'm communicating. We should begin to talk about the opportunities there are in investing in Nigeria rather than the problems or challenges there are in investing in Nigeria. I say this because there is no climb where there are no challenges. But you would find that people in some of those other climes will talk more about the opportunities there are in investing in their climb rather than the challenges of investing in their climb. Every economy, every climate has its own challenges and problems. And indeed, even in the United States, some people will tell you Trump is a problem. Right? Some will tell you Trump is a problem. But yet, investments will still go to America, also to some other markets. And I'm going to be very specific. In the last 3 months, for instance, there's been several conferences held in South Africa, either in Joburg or in Cape Town. It started with the BRICS, and after that, I know I have read about nothing less than 4 investment conferences that I've held in Joburg. There is one going on at this time. How many investor or investment conferences and seminars can we beat our chest and say have held in Nigeria? You can count them on your fingertips. Does it mean that the investment opportunities in South Africa are more than in Nigeria? I don't want us to bog ourselves with responding to that question at this time. But I think more of the issue has to do with the fact that we are bogged more with talking about the challenges and problems in investing in Nigeria than talking about the opportunities of investing in Nigeria. We are today faced with shock that is affecting the emerging and frontier markets all over the world. Those economies, if you go, you are knowledgeable and you know it. That if you try to analyze those economies, you will find not only have they lost reserves, they have also lost exchange rates. Their currencies have depreciated. We were at the IMF World Bank meeting in Bali, and issues brought about the US Fed normalization came up, both at executive and even at medium or low level in that conference. And I'm going to be specific again. And in one of my private discussions, even with the Minister of Finance of Indonesia, Indonesia has lost at least 14% in exchange rates. They've depreciated by at least 14%. As at last month, they've lost nothing less than 22 billion in their reserves. And the challenges in Indonesia, I'm sorry again, I'm sure if you compare them, while we were at that conference, there was, earth tremor? Indonesia has earth tremor every day. It's a country that is virtually in the middle of the Indian Ocean. Nigeria has never faced any. But yet, all of us prefer to talk about other climes rather than talk about Nigeria. Majority of us that are here today are Nigerians, and I'm trying to say that we have a set of intellectually sound people, and you should be able to tell the positive story about your country. That is the only way we can witness the growth and economic development that we so dearly need in this country today. So I want to thank the CFA Society for taking the time, and I was looking at it, I saw Nigerian Investment Forum. So this is one of those we can begin to count. And And I have tasked some of the businessmen in Nigeria and some of the ministers and governments that are busy running outside Nigeria because of ESTA code, because they want to go to investor conferences. You need to begin to think about investor conferences in Nigeria. Even if you want to be paid ESTA code in Nigeria, perhaps we'll have to try and talk about it. So you can be paid ESTA code in Nigeria, but please organize investment conferences in Nigeria. That is what will help Nigeria. That will help our country. We must sell our country. These are the bedrock not only of investment activities, but also of all other activities that require human cooperation. When we demonstrate high propensity for honesty and transparency, stakeholders in the financial industry will undoubtedly entrust us with their life savings, their investments, and their financial decisions. I consider the theme of this conference apt and very well timed, given the current efforts to boost Nigeria's investment climate. The conference provides a unique opportunity for us as policymakers, financial experts, and captains of industry to rub minds on how to strengthen the Nigerian investment industry and climate. So borrowing the phrase from your institute, I'll say, let's build a better world for investors in Nigeria. Distinguished ladies and gentlemen, my speech today is titled Improving the Investment Climate in Nigeria, the Role of the CBN. As I proceed, I'd highlight recent developments within the Nigerian economy and generally apprise you of some key policy initiatives of the CBN to improve Nigeria's investment climate. As a quick background, let me briefly remind all of us of the events of the past few years during which period 3 major global shocks impacted the Nigerian economy. 1, I'll start by mentioning the sharp fall in crude oil price from as high as $114 per barrel sometime in 2014 to approximately $28 per barrel in February 2016. These perilously constricted foreign exchange earnings and federal government's revenue. 2, then there were geopolitical tensions along critical trading routes in the world, including between Russia, the Western powers, the United States of America, China, Saudi Arabia, Iran, just to mention a few. The last of these shocks was the ongoing normalization of monetary policy in the United States as the Fed ended its quantitative easing program and proceeded to increasing rates through policy normalization. These shocks diminished global economic growth and have had adverse spillover effects on the Nigerian economy. At this time, key indicators in the domestic economy deteriorated. For instance, our GDP contracted for 5 consecutive quarters, bottoming out at minus 2.33% during the third quarter of 2016. Concomitantly, inflation rose steadily to a peak of 18.7% in January 2017 from 9.6% in January 2016. Unemployment rate also accelerated to 14% in January 2017 from 6.4% in January 2015. These developments effectively plunged the economy into a stagflation, which is the simultaneity of declining output, rising inflation, and worsening unemployment. During this time, our gross external reserves fell to nearly 23 billion as at October 2016, compared to 40 billion in December 2014. This was accompanied by sustained pressure at the FX market as demand consistently outstripped available supply. Consequently, the exchange rate depreciated substantially to roughly 525 naira to the dollar in February 2017, from about 165 naira to the dollar in January 2015. This was partly aggravated by sustained net capital outflows by foreign investors, which triggered huge volatilities at the stock market during that period. Distinguished ladies and gentlemen, we all know that Nigeria withstood these unsavory developments and exited recession in second quarter of 2017. This recovery has been sustained for 5 consecutive quarters, although the pace of GDP growth has slowed from 2.1% in the fourth quarter of 2017 to 2% during the first quarter of 2018 and further to 1.5% during the second quarter of 2018. Short-term outlook, however, remained resilient with average growth projections of about 2% in 2018. Correspondingly, after a sustained period of rising inflationary pressure, which peaked at 18.7% in January 2017, the Nigerian economy witnessed 18 consecutive months of disinflation to 11.1% in July 2018, although slight upticks due to rising food prices raised it to 11.3% in September 2018. Inflation is expected to rise slightly to about 11.5% by the middle of 2019 and then moderate thereafter. The exchange rate has remained largely stable at the foreign exchange markets, with evident convergence across all segments. At the BDC segment, we have seen a significant appreciation of the naira from over 525 naira to the dollar in February 2017 to about 359 to 360 to the dollar today. Rates at the investors and exporters window also appreciated from nearly 382 to the dollar in May of 2017 to slightly over 360, just about 362 today. Foreign exchange reserves also recovered significantly from about 23 billion naira in October 2016 to over 48 billion in June 2018. Today, due to capital flow reversals occasioned largely by the US Fed rate hikes, FX reserves have dropped slightly to about 42 billion. This level of reserves sufficiently provides over 12 months of imports cover nonetheless. The overall balance of payments account has remained positive since the fourth quarter of 2016, driven largely by positive current account balances. As a percentage of the gross domestic product, the BOP increased from 3.4% in the fourth quarter of 2016 to 5.7% as at second quarter of 2018. This reflects the oil sector-driven trade balance, which grew from $2.3 billion to $8.4 billion over the period. The current account balance and overall balances are expected to remain positive over the short term, given the expected continuation of favorable developments in the international oil market. This positive outlook is further reinforced by the prevailing efforts to bolster domestic factor productivity and increase non-oil exports, the benefits of which are expected to touch down within the short term. Ladies and gentlemen, economics and policy makers widely recognize that pulling an economy out of recession is indeed an onerous task. It is even more challenging in the occurrence of stagflation. This is because policies that are required to stimulate aggregate demand and spur growth are often in conflict with efforts to rein in inflation. Thus, it underscores the dilemma in policy making in a period of stagflation. Our understanding of the nature of Nigeria's domestic imbalances indicates that two key elements accentuated the effects of the global shocks. The first is the diminished total factor productivity in Nigeria due to a low and inadequate infrastructural base. The second is the overdependence on imports for both capital goods and domestic consumption. In view of these developments, and guided by exhaustive in-house analysis of the evolving global and domestic economic conditions, the CBN took a number of countervailing policy measures, and these include, in the area of monetary policy, the bank embarked on a cycle of tightening to rein in inflation, with the policy rate in July 2016 from 12% to the prevailing 14% today. We also adopted open market operations to support the tightening measures. Given the illusion and wealth transfer caused by inflation, the CBN remains resolutely positioned to tackle inflation expectations, and the four guidance I provide is that we would continue to rein in inflation. Whatever conclusions you make from there, I leave to you. In the area of external reserves management, we introduced demand management measures controlled use of FX for import of goods that can be produced in Nigeria. We established a decisive withdrawal of the de facto subsidy for the importation of 41 non-essential commodities with unfolding successes. This policy is expected to continue until the underlying imbalances in the Nigerian economy has been fully resolved. Yes, 41 items. I was abused. I was told that even the rationale for picking toothpick as part of the 41 items is unthinkable. They concluded that it's as if I entered the room and was just looking for various items, and that I picked toothpick, that I wasn't ashamed of picking toothpick. Ladies and gentlemen, isn't it a shame that a country like Nigeria that is endowed with the resources to produce what we eat, or eat what we produce, imports toothpick from outside Nigeria? And I try as much as possible to make people understand what is the technology behind making toothpick. Toothpick is made out of bamboo tree. And I'm sure if you divide this hall into almost 50 partitions, the size of the factory that makes toothpick is just about one of 50 partitions that you could make out of this room. And I don't even know what it will cost to fell a bamboo tree and just sharpen it and cut it into toothpick. Am I communicating? Today, NYSC, people who just graduated from the NYSC in Abuja, somewhere in Ogun State, they are producing toothpick of better quality and cheaper than the imported alternative from outside the country. For me, it's not about reducing reserve or the pressure on reserve from importing toothpick. Really, how much is that? Because that's why sometimes I can maybe understand why the Economist newspaper or whatever that came up with that abused me on toothpick, maybe I can understand. They could say, well, look, why did this guy just come up with toothpick? How much reserve is he going to save from toothpick? Ladies and gentlemen, it's not about the FX reserve that I save through not allowing or not allocating foreign exchange for the importation of toothpick, but it is about the job that is created in Nigeria. Go and look at the demography, Nigeria today. Over 60% of Nigeria's population is in the age bracket of, is it they say 30 or 32 and below. A country like Nigeria will have a chance to come up with opportunities that will drive growth, taking advantage of the strength in this demography of people of the age of 32. If we, policymakers, can just sit down and develop the policies that will energize and bring out the God-given potentials in these people below the age of 32 for the good, not only for themselves, but for the good of this country. But if we, policymakers, fail to develop policies that will bring out the positive aspects of these people below the age of 32, and you sit down as a policymaker wearing tie and suit or beautiful skirts and ties from abroad, Lord knows what will happen to you. By the year 2050, when Nigeria's population is projected to be the third largest in the world. That is what we must all begin to think about. And we would need more of advocacy in this intellectual community to drive this story forward. On exchange rate management, the CBN took a number of actions to stabilize the exchange rate amidst escalated pressures from speculators, bettors, round-trippers, and rent seekers. The CBN encouraged increased FX inflows from remittances by licensing international money transfer organizations, foster more FX sales in the interbank market, and established the investors and exporters window 2017. In the area of development finance, recognizing its role as an agent of development and aimed at ensuring self-sufficiency to reduce the excessive dependence on imports, the CBN invigorated its development finance activities. The bank engaged in targeted interventions at specific high-impact sectors like agriculture, manufacture, micro, small, and medium enterprises, education, power, and etc. In the agri sector, the Anchor Borrowers Program has ensured that Nigeria is gradually emerging from a net importer of rice to become a major exporter. I was reading a report again yesterday. They said the United States said that the volume of import of rice in Nigeria increased by 400,000 tons. Ladies and gentlemen, I'm not a politician, but I have said that people should be very mindful when they open their mouth and say what is untrue, because we will come out as central bank and attack it, particularly if you use the data incorrectly. And I seize the point to say it is untrue, and most of you here are bankers. And you can check your LCs, volumes of your LCs and FOMEMs, and judge for yourself whether $1 has been allocated by the Central Bank of Nigeria for importation of rice since April 2017. No, in fact, since 2016, when 41 items started. The data that we have today shows that rice imported, and I use the word illegally, into the country is less than 25,000 tons in 2018 so far. Then how could an agency who has not even been to Nigeria, who has not even been to the farms to see what we are doing, just come up and say that Nigeria imported even more than 400,000 tons above what it normally should import? Go to the data from the countries that export rice. Go to Thailand, go to India. You will see the data is there. Google Thailand Exporters Association, Rice Exporters Association. You will find what is the quantity of rice imported by Nigeria. Our policy is working. We need advocacy. We need people to talk about it positively and not negatively. Do not sit idle and criticize and use false data just because you want to gain some points, whether politically or otherwise. I repeat, I am not a politician. I'm a banker, but I'm telling you, since the Anchor Borrowers Program was introduced, Nigeria has empowered over 800,000 smallholder farmers in Nigeria. What does a smallholder farmer require? Less than 250,000 naira to cultivate 1 hectare of rice. These people never had access to finance, which has been the bane of the Nigerian banking industry. People who cannot have access to knock at the door of a bank manager, today 800,000 of these people have been empowered. And today the wealth in Nigeria's rural community has been enhanced. And people sit and use geopolitical satellite and say Nigeria has imported more than 400,000 tons in excess of what it imported the previous year. This is false and fake news. The Anchor Grower program is also being extended to other agricultural producers. In the area of credit allocation, as part of its long-term strategy for strengthening the Nigerian economy, the bank established initiatives to resolve the underlying challenges to long-term GDP growth, economic productivity, unemployment, and poverty that had pervaded the economy over the past decades. Hence, the CBN established the Credit Bureau and the National Collateral Registry to improve access to credit in the domestic economy. We equally took specific measures to increase credit allocations to pivotal productive sectors of the economy. This is with a view to stimulating increased output in these sectors, creating jobs on a mass scale, and significantly reducing our import bills. In the area of risk-based supervision, the recent weakening of the Naira, following the shift to a more flexible foreign exchange mechanism, impacted somewhat on the balance sheets of domestic banks. To guarantee financial stability as Nigeria continues with flexible exchange rate system, the CBN took a number of steps, including monitoring compliance of supervised institutions with the Foreign Exchange Management Framework issued in June 2016 through our risk-based supervision methodology, which also involved reviewing international trade and foreign exchange operations of local markets. 2, monitoring the financial position and performance of supervised institutions. 3, assessment of the risk and governance management practices of banks, as well as conducting an assessment of the risk profile of banks. In the event of major deteriorations on any key risk indicator, we engage with the affected bank in order to mitigate concerns and shore up their capital base. Distinguished ladies and gentlemen, a number of these policies and initiatives contributed immensely to the improvement in Nigeria's ranking in the ease of doing business. Specifically, the establishment of the Credit Bureau and the National Collateral Registry, which improved access to credit in the domestic economy, contributed significantly. Besides, the introduction of the transparent investors and exporters window, which increased investors' confidence and eased market sentiment, also boosted our doing business indicator. Ladies and gentlemen, global interest rates are rising today following the gradual withdrawal of the quantitative easing program, especially in the US, UK, and the EU. The Fed fund rate was raised steadily to 2.25% in September 2018, with a promise for one more hike before the end of 2018 and 3 more in 2019. In fact, at some informal sessions, people have talked about the fact that the hikes may continue till 2020. Similarly, the Bank of England raised her policy rate in August 2018 for the first time since 2008. So 2008, that means 10 years. So those of you on the day of MPC that sits down on television and says, hey, this CBN, for 2 years has not touched policy rate, does it mean they don't know what to do? You now know that there are other climes where policy rates have not been adjusted for 10 years. Some emerging market economies, including India, Indonesia, Mexico, and Turkey, have raised interest rates in response to the US policy rate normalization, while others have left their policy rates unchanged. The key interest rate of the European Central Bank is expected to remain at its present level at least through the third quarter of 2019 to ensure a sustained convergence of inflation towards 2%. Against this backdrop, capital flows or capital outflows from emerging market economies have increased tremendously and we suspect may continue. This has led to a substantial appreciation of the US dollar and other major currencies amidst exchange rate market pressures in many emerging market economies. Argentina, Brazil, South Africa, Turkey, and Russia have already depreciated their currencies significantly in response to this shock and have also substantially lost reserves. The CBN is mindful of these challenges and has instituted measures to deal with the probable developments as they emerge. In light of the current developments in both the global and domestic economies, and based on extensive in-house simulations, the CBN is of the view that the short-term outlook for the Nigerian economy remains robust. For instance, in monetary policy, the monetary policy stance will remain judicious, research-driven, adequate and supportive of the real economy, subject to underlying fundamentals. You can make your conclusions. The CBN will continue to ensure that the policy interest rate is delicately set to balance the objectives of price stability with output stabilization. You can make your conclusions. On GDP, with favorable oil price developments and continued efforts at driving indigenous production in high-impact real sector activities, especially agriculture and manufacturing, the GDP is expected to pick up in the remaining 2 quarters of 2018. This will be buoyed by the anticipated budgetary and electioneering spending in the near term. From 1.5% during the second quarter of 2018, growth is projected to quicken to about 1.7% during the third quarter and 1.9% during the fourth quarter of 2018. Inflation expectations are rising on the backdrop of anticipated politically related liquidity injections. For the rest of 2018 and towards middle of 2019, inflation is expected to rise slightly to about 11.5% and then moderate thereafter. On exchange rate, notwithstanding that the forthcoming elections could exert some pressures on exchange rate, especially as the political marketplace heats up, the exchange rate is expected to remain reasonably stable. Gross stability is projected in the FX market given increased oil-related inflows and contained import bill. So are we going to be able to achieve it, the stability? Those who think we may not be able to, I would say that don't bet with us on this subject. Because if you look at it, again, you are analysts. If effectively you've seen that the sanctions on Iran has kicked in, and I was reading today that both, I think Saudi and Russia are contemplating output cuts. If that's happened, we would expect that the trajectory for crude prices should be upward somewhat, and if that is sustained with the demand management that we have in place containing FX allocation for imports, then you can expect that we should be able to fund the market and keep the exchange rate stable. Am I right or wrong? The guess is yours. On BOP, overall balance is expected to remain positive in the short term. As oil prices continue to recover, we expect the current account balance to strengthen. This will be supported by improving non-oil performance as diversification efforts begin to yield results to reduce undue imports. Ladies and gentlemen, the foreign exchange restrictions imposed on the 41 items will continue to be implemented in the medium term and indeed more vigorously. The objective being not just to conserve scarce foreign exchange, but also encourage local production and create jobs on a mass scale for our teeming, youthful population. The CBN will continue to provide the necessary enabling environment to safeguard business and investors' confidence in the market. In doing this, we will ensure that the market remains sufficiently fluid with optimal liquidity to guarantee the stability of the financial system and the foreign exchange market. The bank will ensure effective communication to guide market expectations and consumer behavior. These measures will undoubtedly mitigate the challenges from expected capital reversals due to rising global interest rates and expected liquidity from the fiscal surprises of the 2019 general elections. Distinguished guests, our economy remains strong, as evidenced in the stable exchange rate and robust reserves. We assure you that with numerous policy measures put in place, the economy is very much resilient to anticipated shocks. You will agree with me that the CBN was able to weather the storm when oil prices nosedived in 2014 and 2015, and indeed 2016. Currently, we are at a much more advantageous position as both oil price, production levels are improving, leading to robust reserves. If you recall, during those periods, we didn't see good oil price and we did not see good production capacity. As we approach the 2019 general elections, please rest assured that the economy will remain resilient and even stronger. I thank you for listening.
Just to do a quick recap, I think the closing of speech sort of summarizes everything in the sense that we can rest assured that the economy is in a good shape to withstand any potential emerging market crisis that we may come across. And in terms of the key things that the CBN has been doing or is planning to do to continue to support the economy and also to ensure that this is adequately taken care of. We've heard that there's going to be stability in the FX policy. We've heard that there's going to be stability as well in the monetary policy making, and that will remain, in your words, remain judicious and supportive of the economy. And also, you can also realize as well that there's going to be a lot of, I guess, flexibility as well from what the CBN governor has said. So what we'll do now is to take a few questions. I have a few here that I would ask directly, and then afterwards we'll take from the audience, and then we'll wrap it up. Mr. Governor, from your speech, I think the one key thing that you mentioned is that the policy-making dilemma between being able to spur growth on the one hand, and also at the same time being able to, I guess, address the challenge of inflation, which you rightly admitted that is one key, policy dilemma that I guess any CBN governor, any CBN banker would have to face. Now, I think, in our opinion, I think this has been a key challenge, particularly in Nigeria historically, and that's because we've seen a lot of efforts by the government and by the CBN in the past to try to address aggregate demand, try to address spurring growth, but at the same time, there's also that balancing act of ensuring that inflation does not jump out of whack. So, what is what are the key areas of, what are the key decision triggers for the CBN in making this decision, and what is the outlook for that going forward?
Well, thank you very much. I think I had used this word somewhere before. I said, what you find is that people generally want reduced unemployment. You want, if you can, low inflation. You want robust reserves. You want, I use the word low or somewhat at least low exchange rate. Everybody wants that. But unfortunately, in economics, it's like sometimes these things go in inverse direction. Nigeria, during the period of recession, like I said in my speech, was faced by rising unemployment, inflation going up, and at the same time, output dropping to the point where we saw negative growth. Then you now find the challenge that how do you boost output growth, whereas you want inflation down? How do you do that? That is where we talk about the challenge in policy making. And I will say that the Monetary Policy Committee has done a brilliant job of these. And luckily, the Central Bank Act gives us the power to do some of the things that we are doing. And that's the reason we've said that price and monetary stability at the MPC remains sacrosanct, and that we will do everything possible to continue to tighten so as to rein in inflation. Yes, we understand on the other side, and in the flip side, when you tighten and rates go up, it constrains the capacity to create money or capacity to borrow on the part of the deposit money banks, or makes it expensive for those who want to borrow money for productive activity. So given that challenge, what has central bank done to see to how to stimulate growth while at the same time working towards reining in inflation so as to achieve policy objective of its mandate of price and monetary stability? Some of you would have observed that the Monetary Policy Committee came up and said, listen, that management must come up with a policy that addresses this issue. And that's the reason, I think about 2 months ago, we unveiled the CRR regime, where some portion of the CRR regime or CRR liquidity that is in the hands of the CBN can be released to the banks when they identify what we call employment stimulating or output growth stimulating projects in the area of agriculture and in the area of manufacturing. Policy committee members know that when you hold and somewhat release a little, what it does is that it blunts the efficacy of monetary policy. But we have come to a point where we know that, yes, we must achieve a balance. Achieving that balance means that we must release the lever in liquidity at low interest rate, single-digit interest rate, to support agriculture and manufacturing and other employment-stimulating and growth-enhancing sectors of the economy. That's what we've done. And I must say that we have also warned that banks must comply judiciously, not only with the letter and content, but also in the letter and the spirit of that policy regulation. Because we know that it's a lot of pain that the Monetary Policy Committee has taken to begin to say, let's release liquidity through this avenue. And that everybody must be seen to understand that as monetary policy is supposed to be tightening effectively, that we also realize that we are loosening. On the other hand, that effectively is that we are still tightening. But at the same time, make sure that where you're releasing that liquidity is a high impact and employment stimulating sector of the economy. That's what we have done. It's with great pain that the Monetary Policy Committee had to consider this, but we are optimistic that it will work because some of the projects that we have seen at the central bank are those that really fall within the range that we have actually set. Thank you.
Right. Thank you very much, sir. Just to sort of follow on that, the response you just gave, I think we all agreed that one of the challenges historically is how monetary policy can effectively drive, the real economy. Now, in trying to piece this together, the CBN has gone ahead to increase its intervention efforts. You mentioned the huge successes you've had in the Anchor Borrowers Program, which we've all seen. We've all seen what's happening in agriculture in the past, 3 to 4 years. But then the question is, these intervention efforts, how sustainable are these over the medium term or long term? And at what point do you start to implement a policy where the banks can actually take on from where the CBN stops? Because in reality...
the banks are expected... It's not about the banks taking off. It's about the fact that the banks are supposed to be partnering with us to achieve this.
Right.
So you are wrong if you're a banker to say where the banks take off from. And that's part of the problems we have with the banks. That you will talk about where you will take off from. Your job as a bank is to stimulate the economy, to act as a catalyst to growth and development, one way or the other. Yes, you have a responsibility to work for your shareholders, which is to maximize profit. And what you do is take the money and put it in treasury bills because you feel the yield is good. We are not happy with you about that. So that's why I have to interrupt you. But I can tell you that it is yielding results. It's not just Anchor Borrower Program, which is, like I said, providing employment or opportunities to access credit, unsecured, for 800,000 smallholder farmers. 800,000. I can tell you that with that, effectively, we have empowered nothing like that, 800. Just, you look at it just directly. Don't look at some of the fallouts. We have empowered 800,000 communities or people in our rural communities. We have disbursed over 100 billion naira in this project. And that's why it's painful when people come up and begin to say that it hasn't worked and that rather that we're importing rice. It's very discouraging. And that's why I say if you cannot join us in this message, just keep quiet and let's continue on our journey. Thank you.
Thank you very much, sir. In recent times, I guess we can point to two events that should begin to prompt questions around what the outlook for monetary policy is. And the first one is the upcoming elections in February next year. The other one is the recently agreed new minimum wage. What impact do you think this will have on monetary policy, and what is the outlook in medium term?
Well, I said so already, and that's the reason for 18 consecutive months, monetary policy succeeded in reining inflation from 18.7 to 18.1 in August or July 2018, until we started to see some uptick, and it's because of the impact of electioneering spending, as well as what you put it at as the wage increase, that is making us think that inflation might trend upwards to about 11.5% by around middle of 2019. But I can assure you that, and I heard an interview sometime last year, and this issue of the impact of electioneering on economy or on inflation and all that. And I said that the Monetary Policy Committee is enlightened and knowledgeable enough to know what is the size of liquidity that is needed to run an economy of this size. And that once we find that that liquidity is above the liquidity we find in the system is above the optimal level of liquidity we expect in the system, monetary policy will take appropriate action to suck it out of the system so as to be able to achieve its objective of price and monetary stability. Thank you.
Thank you, sir. So we'll just take one or two questions from the audience. We have quite a bit here. I guess the first one we'll take from here is a simple, straightforward question that just says, is it possible to commit about $1 billion from over $42 billion reserves to fund affordable housing in Nigeria? And if not, why?
Well, the pain that I have, or that I carry, is that everybody thinks that you must come to CBN. We're happy. And I'm not trying to say that the mortgage sector is not important, but we believe that there are other things that the banks themselves sitting on their own can do to stimulate that. We're looking at mortgage guarantee scheme to help stimulate the mortgage market. We're looking at various forms of schemes, and I'm looking and I'm saying, we have friends that live abroad. They want to come home. They want to, they want some kind of mortgages in Nigeria, and they can't. And that continues to tell me that even within, there are a lot of opportunities for mortgage business and mortgage credit. I am not very sure even that the problem is that they need extremely low interest rates. They are not even talking about interest rates, they are just talking about availability of this credit. And that is why I say our deposit money banks must step up and begin to structure mortgage products that will stimulate that sector of the market. It's not enough to just leave everything to the central bank. I think we're okay trying to look at agric, manufacturing, and other employment and output stimulating sectors of the economy.
Mr. Godwin, we would like to thank you very much for your time spent with us this afternoon. You'll agree with me that this has been a very revealing session, and we've had a lot of key takeaways. So we'd like to thank you very much. Round of applause for the Governor of CBN.
Another round of applause, please, for the Governor of the Central Bank of Nigeria.